Hey, good morning, everyone. Welcome back to another episode of Policy and Profits. Crazy week this week. Here, Anthony Esposito from Island Capital. I am the profit side, and EJ Antoni joining me on the policy side. EJ, how are you? How was the week?
Anthony, I am hanging in. Crazy week is right. That's the best way to describe it.
I think we have we have a lot to dig into, and and honestly, it's not an empty compliment, but your insight and your intellect in the policy, the Fed action, economic data is just off the chart. So I'm actually sitting on the desk right now and trading as the market is melting down, and happily, and I am making money as we head down for Island Capital because we've been short based on our model, but we'll get into that in a little bit. I do want to talk about the non-farm payrolls number today, which is leading us back into that the topic of rate cuts, which is actually nauseating most people, I think us included at this point. But let's start with non-farm payrolls because we had a little market volatility heading into it. We had some volatility coming out of it. It looked like the market might turn to the upside, and now we're melting down. We're down 1% again today. August and September, both 2 months where we started down over 2.5% for the beginning of the month. That has not happened for quite some time. Non-farm payrolls number came in at 142,000. Expectation was 165. Prior, as we know, was 114. Revised down to 89,000. Okay, so for me, for a trader who's trying to watch economic data and the policy side of it, asking you, someone who's an expert in it, what are these numbers telling us as far as economic strength and what the Fed should be doing? What is more important at this point?
Well, Anthony, I think what the numbers are telling us right now is the labor market is essentially flatlining. Right, the patient is losing its heartbeat on the table here. I mean, we're basically looking at from all these downward revisions, which have become disturbingly consistent. We're looking at a situation where more than half of the job growth in this report is literally jobs we thought we already had from previous reports, but were revised away. And now you already pointed out that the one of the previous month's revisions put that number down to below 100,000, below 90,000, actually. So we're looking at virtually no job growth when you consider how many millions of jobs are in this economy on a percentage basis. This is nothing. This is essentially a rounding error. And speaking of rounding errors, I mean, the BLS has really just taken the cake lately with the number of jobs that essentially they initially estimated and then get later revised away, whether it's in these monthly reports like we're seeing with this report right now, or whether it's with the annual benchmark where they look back over the course of a year and they use unemployment insurance data to try to really pinpoint, get a more precise picture, in other words, of how many actual non-farm payrolls or non-agricultural jobs are in this economy. So the whole thing really just points to anemia within the labor market. And when we start drilling down by sector, we get a lot more bad information where you see between government and the government dominated healthcare sector. That accounts for well over half, almost 2/3 actually, of the job growth we've seen over the last year. That's problematic because you need a lot of private sector jobs to pay for every taxpayer funded job. And that's what you see not just in government, but in a lot of healthcare as well. We are basically hemorrhaging full-time jobs. The economy shed well over 1 million of them and just replaced them with part-time work over the last year. Manufacturing, which has been in recession for pretty much the last 2 years, if you want to call it a soft recession, fine, but the sector has been contracting. They're off over 100,000 jobs in a little more than a year once you factor in that benchmark revision. So again, just a lot of anemia within this market. And you asked what about the Fed? What should the Fed be doing? I'm not sure that this is really a justification to be cutting rates. Can the Fed cause a temporary stimulus, kind of a sugar high in the labor market when they cut rates? Sure, absolutely. And then that just gives us more inflation down the road, which hurts the labor market. So I'm a big believer that the Fed really shouldn't even be focusing on the conditions in the labor market. The dual mandate is nonsensical. I think they need to focus on killing inflation, which still isn't dead.
Yep. Yep. So awesome. Thank you. Makes total sense at this point. So if we look at the number, I noticed that as which is becoming par for the course, two of the top three sectors where we saw any job creation in this report were government jobs and then healthcare and social assistance. So again, that's funding that is being funded by the government. So it's laying out, $8 trillion to get $6 trillion in growth. It's a losing strategy. The market, um, although now pricing in over a 50% chance of a 50 basis point cut at the next meeting, at the September meeting, the market, as I said, put your money where your mouth is. We're down 1% today, and we've been down over 2%, well, close to 3% prior to today. So we're having a pretty significant drawdown in equities, in risk assets. So those rate cuts don't look like they're going to matter as much at the moment, right? So it's just a day, and this is a much bigger picture. But we've seen that manic reaction by market participants when they think it's really going to matter. And that leads me right to what you just said, full circle. Is the weakness in the economy, the weakness in the job market, and the fact that inflation really is not under control right now to be cutting rates, is the market starting to wake up, and should we all be waking up to the fact that we're actually heading down a pretty hard landing? And not only that, but my question is, as we talk through this, are we heading into a landing and a scenario where we're going to have stagflation, where they're going to cut rates?
Mm.
And this is a simple view. This is a analyst, PM, trader view, asking the question: are we heading into a spot where we are cutting rates, and at the risk of higher inflation, we can potentially see a move back up in inflation, which looks like we will, based on not only Fed funds rate but overall. Um, we have lower job growth. We're in recession now, and inflation is back up at, pick your number, 6%, 8%, 12%. I mean, are we setting up potentially in this current scenario with these current inputs for that type of situation, which would be, I mean, extremely negative for everyone day to day. But as far as the capital markets go, you know, hold on to your hats, because we have plenty of room to go to the downside. That trip we just had down to 5,100 in the S&P was the appetizer as far as I'm concerned for what I'm seeing. But do you agree with that? And what's this setup look like?
Yeah, Anthony, I think you're really hitting the nail on the head. And this is particularly troubling once you realize that we're already running $2 trillion plus deficits right now, annual federal deficits. And those things always explode whenever you get into these recession or recession type scenarios. So you're looking at those numbers really going to the moon. So if you think T-bill issuance right now is bad, just wait. Just wait until we start getting more outlays from things like unemployment insurance going up and payroll tax revenue going down.
Yeah.
I'm very, very concerned at this point that we continue to see a lot of upticks in terms of input price, input cost inflation. When we look at different, PMIs, for example, particularly in manufacturing, the only saving grace thus far has been the fact that the recession in Europe, particularly their manufacturing sector, has been so bad, and demand has so just completely fallen off a cliff, that essentially we're seeing those that put downward pressure on global commodity prices in a lot of different markets. And again, the upside to that has been it has helped reduce costs here at home. Unfortunately, we're seeing a lot of public policy mistakes that are helping to counter that are helping to put upward pressure back on prices. Things like the hamstringing of natural gas exports, natural gas production. It's amazing, but Russia is now exporting more natural gas to the European Union than we are. I
Yep.
mean, we literally have tankers of the stuff ready to go, but because of regulation and red tape, we're not allowed to send it.
Yep.
And that's particularly problematic for us because we have a huge advantage when it comes to natural gas. You have places around the world, like a lot of times in the Middle East, where it's insanely cheap for them to get their oil out of the ground.
Mhm.
Conversely, places like Russia, especially in Siberia, it's much, much more expensive for them to get their oil out of the ground. We have one of the best cost advantages in the world when it comes to natural gas, and sadly, we're just not able to export a lot of it. So, bit of a long-winded answer there, but Anthony, I think you're absolutely right. I think we're seeing I think we're seeing the potential for not only that slow economic growth, but also the return of inflation, kind of like that 1970s nightmare
Yeah.
scenario. I'd love to hear your thoughts on how it seems like for the longest time the market was stuck in that mode of bad news is good news. In
Yeah.
other words, the bad economic news is going to guarantee rate cuts, and rate cuts are going to be good for us because now it's time to lever up again, right? And
Yeah.
we can borrow like crazy, and stocks and other equities, whatever the case may be, all kinds of asset classes are going to go back to the moon. And now it seems like, as you said, that hard landing scenario is becoming more realistic, and it seems like it's dawning on markets that what, bad news isn't good news
Mhm.
anymore.
Yeah, I think so. It's been the idea is this: as you head through the cycle and you get to the end of the cycle, um, a bad news, good news scenario headline idea for me is the signal that we're kind of there. Now, there could be, the old saying, the market could stay illogical for much longer than you can stay liquid. So that being said, when we start to say bad news is good news and we start to rationalize why a recession, weak jobs growth, all become good things for the market because the Fed is going to save the day, those for me, while conscious of the technicals, while conscious of what my model says, and honestly, we've had a beautiful buy signal coming off of the August 5th low, and prior to that, heading up to the other peak. So you can make money in an illogical market, but broader stroke, top down, bad news is good news for me is bad news, and it's because you're looking for reasons why weakness, weak economic data, weak earnings growth, all these things are okay. Because don't worry, we're going to have the Fed come in, or don't worry, we're going to issue more debt, or don't worry, we have a mass of new workers coming in from the southern border, according to Harris and Biden, that's going to actually pump up the economy and is going to actually increase revenues. Like when you start to find good news and bad news, it's because you don't want to acknowledge the bad news and you need to spin it. I'm not a big fan of spin, which is why, I'm not a straight quant, but I am a rule based investor and a rule based trader. The portfolio runs on rules, on momentum trend rules, on pattern recognition rules. And if bad news for the moment is good, great. We'll take a ride and we'll be traders there. Am I a long term believer in additional higher prices now before we reset? No, I'm not. So I think bad news is good news is a red flag. I think we've been living in that mantra for a long time, and I do feel that it's coming due. I really do. Unfortunately, and I had the pleasure. Just for a quick side note, I did have the pleasure of meeting President Trump this week. Absolutely, the opportunity of a lifetime. Wonderful, wonderful experience, and I cannot wait to see him back in the White House. But unfortunately, I do believe the timing of it will be as he heads into the White House and puts pro growth, better programs, better economic programs in place, and starts to shut down the border and starts to become a little more grounded in where we need to be policy wise and top down. I think we're going to be hitting the spot where we're hitting the ground. So
Mm.
with that said, I hate to see it come with his name on top of it, and everyone will attack it. However, if it needed to come with anyone's name on top of it, and I have any faith in that person to fix it and to handle it the best way possible, it is President Trump. So I do think bad news is bad news. Very long-winded way of saying it. I do not think the Fed is greater than the market. It's not. We can push that headline, we can push that narrative, and as long as everyone's on the train, it's great. The problem is when they start to jump off the train, we go off the tracks, and it happens every time. It's a story everyone's seen. Everyone seems to forget until it starts to happen again, and then everyone changes their tune. So this news is not good to me. Economic data is not good. The risk of higher inflation or a spike back up, like you said, akin to the 70s type scenario, 1970 scenario, is real. If we look at jobs growth in general and whether people are feeling the pain or not, people are feeling the pain, and a lot of the reason is I think we're losing the lower skilled jobs to immigrants and illegal immigrants, which is if you look at the numbers and the statistics, it's the statistical fact that that's what's happening. We're seeing job growth grow away from American citizens, whether it's lower end, lower skilled, lower educated, or higher skilled, higher educated, both important to the economy, and all red blooded Americans, which is everyone's important and everyone plays a role in this economy and in this country. But when we have illegals coming in across the border that are not only taking jobs from citizens across the gambit, but they're taking assistance that they're not entitled
Mm-hmm.
to. They're
Mm-hmm.
taking literally iPhones, prepaid cards, payments to move out of assisted living, healthcare, education, luxury hotel rooms. They're actually building hotels in California and placing them in the hotels now. If they're not in Colorado, just taking over the hotel by force with AK-47s, and we don't seem to stop it. So the the I hate to go down the rabbit hole, but the job situation, and we talked about this last week, the job situation, the economy is so closely related to the border, and then so closely related to the market action, people's wealth, people's confidence, um, and inflation and the price of goods. So we're in a very bad spot. I don't know when capital markets really wake up. We're
Mm-hmm.
kind of seeing the flashing yellow light right now. I think we saw it on the downdraft in August, July into August. I think we're seeing it right now. It's kind of it's a warning shot. It's a warning shot, and I think people should be paying attention to it. I certainly am. Um, we had a buy signal, as I said, on my momentum trend, my motor model that I run 90% of the portfolio off of here. We were positive August 5th through the end, through actually August 22nd. We went neutral. And I do write a morning newsletter, and I know I've spoken about it before, but you can read it for free at islandcapitalinvestments.com, or you can go to at CMT underscore Anthony to see that daily newsletter. We went neutral on the 22nd, which was a phenomenal spot. We were hitting resistance in the S&P. We went negative 2 days ago. So this whole downdraft, we caught a good portion of the updraft. We backed off, and now we're catching a good portion of the downdraft, making some money and making some profit for investors here. Always like to see the market go up, but it doesn't always go up. It goes up 86% of the time. So I'm happy to make money either way. The VIX is interesting to me. I do watch a few different factors of the VIX, and I won't go down at what is a very deep rabbit hole, but I watch general spot VIX price, and then I watch term structure of the VIX. So marking out to the front month, second month, third month futures contracts in the VIX. So expected volatility 30 days from today, spot VIX, and then 30 days from 30 days out, first month, and then 30 days from 60 days out, second month, and so on. It's interesting to see the VIX really get comfortable above 20, which is higher VIX, higher vol, not good for risk assets. And I watch the slope of that curve, of that term structure. That term structure slope at negative 10 or lower, negative 10, negative 15, negative 20 is very bullish for stocks. From negative 10 to positive 10, we're starting to head from what we call contango to backwardation. That becomes kind of neutral. And then as we head into backwardation, positive 10 and higher, it's risk off. So a lot here to talk about. More than happy. I go into it somewhat in the report, but it gets a little hairy. But we've gone from about negative 13 at the August 5 lows to now positive 10. So even the VIX curve and the slope of that curve is saying that people are kind of waking up to what they think might be increased risk. Um, we will see. We will see if we test the lows from August. A test of the lows from August, I would say, generally speaking, now with the way we rallied up, and the internals, the momentum trend, the volume factors, I would say we do not hold that low if we test that low. Right now, S&P's at 5437. On my report this morning and for the past week, I had a 5450 and a 5400 near-term target on the S&P. I would expect to hit 5400 by the end of the regular trading session today. So all these things wrapped up. Sorry to go down that rabbit hole on you, but all these things wrapped up, all connected. The policy side of it, obviously, I do lean on you, and I hit you quite often during the week to ask questions. I am on your at real EJ Antoni feed, X feed daily. I do like and repost some of those charts and some of those interviews, but that is it's a main staple for me. It's kind of like my Wall Street Journal at this point to take a look at what you're looking at and what you put out. In fact, today was a great day. You had I don't know, did you put out like 600 charts today on on,
Hey,
on
there's a lot
pop?
to go through on this jobs report.
Absolutely. Absolutely. I wanted to ask you one question, and I wanted to kind of end with this. Um, Kamala Harris. We talk about she has this, and it kind of relates to employment for sure. She seems to think that the idea of jobs, um, the idea of employment is a zero sum game. And the reason I say that is she seems to be hammering and attacking the employers and the
Hmm.
actual businesses that are generating the wealth and the ability to hire people, and then telling the workers that she's actually hurting with her policy, that she's there for them because she's going to give them something. There's a free gift at the end, there's a carrot at the end of the stick. When the idea really should be that if you create a pro growth environment and policy, as President Trump did and will, um, almost like a top down effect. If the owners of these companies, the investors in these companies are doing well, there is growth. Then the employees of these companies and the producers selling to the wholesalers selling to the company, the producers that are working, the retailers that are selling the product, all those things start to build an economy, a healthy economy. I look at her tax policy along those lines. Capital gains rate, she wants to go from 20 to 28%. Investment income tax from 3.8% to 5%. Top income rate from 37% to 39.6%. The corporate tax rate from 15% to 28%. And that's a huge one. I'd like to focus my question on that one because that's
Hmm.
one that we saw Trump reverse. We saw the effects of that reversal. And now she's looking to go back to the Middle Ages as far as the corporate tax rate and lose that investment here. She wants realized capital gains tax to go from 0 to 25% for what she considers to be ultra wealthy. So I guess that's over 10 million in net worth. And she wants the Trump tax cuts to expire, which has been proven out was not a cut for the ultra wealthy and the 1%. It was a tax cut for the entire nation. I think 86 or 88% of the nation saw some tax benefit from the Trump tax cuts, and you can't argue with the results of it. So we'll just stop that there. I won't go down another rabbit hole. If we look at how she's hammering the employers and she's hammering what she considers to be the enemy of the state, which is actually the engine of the country,
Hmm.
and we look at corporate tax rate at 15 to 28%, how do her policies, that one in particular sticks out to me. How do her policies fare if we are heading into a recession? We are heading into higher inflation, which she can't even define transitory or not transitory. She's more interested talking about whether we should have plastic straws or paper straws and whether we need to refine our paper straw technology. So I don't, whatever. Um, how would a Harris administration with these policies in place, coupled with a potential spike in inflation back up 1970s type style, coupled with a hard landing, loss of jobs to American citizens, and an influx, a continued influx of illegal immigrants in the southern border. How do these things tie in? Like, how devastating is this? Or am I just kind of like a Debbie Downer and should be happier on a Friday?
No, no, it's bad. It's bad. Let's end the week on a negative note. Here we go. Yeah, Anthony, you're absolutely right. Let's take that last point first. Over the last year, native-born Americans have actually been losing jobs, well over a million. All of the net job growth that we have seen has come from foreign-born workers, and actually, it's not just even the last year. Although the last year has been particularly bad, there are fewer native-born Americans working today than before the pandemic. So 5 years and no progress. Conversely, for those foreign born workers, they not only are there millions more of them working here today than
Mm-hmm.
before the pandemic, but they've been back on their pre pandemic trend for like 2 years now. So they're doing just fine. That part of the economy or labor market, if you want to say, is fully recovered. But it's Americans who have been, frankly, completely left behind by the policies of this administration, by that wide open border. And I know a lot of people have been criticizing essentially lately that take and saying like, oh look, we need immigrants, right? We need more foreign labor for all these different reasons. And they try to say that it's wrong to say that these illegals are taking Americans jobs. Well, I'm sorry, either the labor market is a market or it's not.
Yeah.
Either there's competition or there's not. When you increase supply, when you increase competition, you drive down prices. This is a big reason why wage growth has been so bad under this administration, particularly wage growth in low skilled occupations, which is essentially what all those illegal aliens are going into, at least the ones who are working.
Mm-hmm.
So what about some of the other policies? Well, the tax ones those are the biggest, right? All the ones that that you just outlined. First of all, the unrealized gains tax would be absolutely devastating. Not only devastating in terms of the how much it would lower return on investment, which would be bad, but also just the disruptions it would cause within financial markets. This whole idea of every December 31st, at the end of every year, we're going to evaluate all of your wealth. Congratulations, you just guaranteed a whole new market of essentially repurchase agreements where people are going to trade these assets with each other at artificially reduced prices, where you promise to buy it back at that reduced price for some kind of fee, essentially, to cover the transaction. I mean, it's just absolutely insane. We're going to tie up all this capital and all this human energy in order to try to essentially get around these taxes in a perfectly legal way. But still, it would create confusion. It would create a lot of inefficiencies within those capital markets, and then you also have the ones that you really can't get around, like you mentioned, the higher corporate income tax rate, the net investment taxes, higher personal marginal tax rates. And so this is really an attack on small business, frankly, because it doesn't matter if that small business owner uses it, whether it's incorporated or not, if it's pass through income or not. I mean, those are the kinds of people that are really, really going to get hammered by all of the tax increases that Harris has proposed at this point, or that her handlers have proposed, whoever the heck it is. And unfortunately, it really, really would devastate the engine of the economy, which is small business. That is the last thing you want to do heading into a recession, or if we're already in a recession, which, I mean, honestly, I think they're probably going to backdate a recession to August anyway. So by the time we're in January, the next presidential inaugural will be definitely in recession at that point.
Yep.
And then on your other question with inflation, the last thing you want to do in an inflationary environment is further constrict the supply side, because inflation is fundamentally a problem of too much money chasing too few goods and services in the economy. It was not just simply Paul Volcker raising interest rates and crushing bank reserves, giving us those 20% interest rates on mortgages, for example, that killed inflation. It was also the fact that Reagan cut taxes and possibly more importantly, reduced regulatory burdens. And so the supply side of the economy absolutely just exploded.
Mm-hmm.
So you simultaneously had less money floating around, but you also had more goods and services in the economy. So it completely flipped that backwards relationship. So it was right side up again. And that is really what gave us that economic boom in the 80s, where inflation came down at the same time that economic growth went up. And today, I mean, we're essentially in a very similar boat, I think, for all the reasons that you outlined, Anthony. And so I think we're going to need a very similar policy prescription to what we saw in the early 1980s to really turn this around.
Yeah, and who do you think is more likely to step into the White House in 24 and or next January and put those policies in place? I mean, and all kidding aside, I mean, is it that binary at this point where those policies are clearly Trump and clearly Harris would be destructive, or do you think there's a potential that there's any semblance of acknowledgement and intelligence on their end where Harris could step in and actually fix this?
Well, let me put it this way. I can't find a single Harris policy. Actually, you can just put a period right there. If you go on their website, you literally can't find any policies. They don't have any listed. They're just
I
like,
love it.
the whole campaign, I guess, is a blank slate. I don't know, but whatever the case, just if you just look at what she has said on the campaign trail, right,
Mm-hmm.
and what her spokespeople have said, there is not a single policy they have put forth that
Yeah.
would be either anti-inflationary and or pro-growth. Conversely, I would say 90, maybe even 95% of the Trump policies do fit that bill, where they are either pro-growth or anti-inflation or both.
Yeah.
And so I think you're right. I think the way you put it as a binary, it really is at this point. It's a binary choice.
Yeah, yeah, it's definitely. It seems to me to be a battle for whether this country wins or loses, and I think it's that. So when Harris is up and Walls is up and they're talking about feeling groovy, and he's freaking out and waving to the crowd as if he's a 5-year-old that just met Mickey Mouse. I actually don't need that. I'm glad he's a happy guy. I'd like him to go be happy, on his own and run around in his backyard, yell at the moon or whatever he needs to do. But in this, as a as a Christian conservative patriot and somebody who loves this country and our standard of living and the growth that
Mhm.
we've seen across the board,
Mhm.
um, yeah, those policies are destructive policies. They are what they are. Any inkling of what they may do or what we've seen her say and do in the past, and what we've seen her and Biden do in the White House is just as a citizen, as an American citizen, it hurts my heart um, to think about where we end up as individuals and where our families end up and our children end up. And as an investor, it makes me very, 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 very defensive and very worried about what the portfolio is going to look like and how to actually what our markets look like, where we end up. And everyone, I'll end on this, everyone is invested in the market in one way or another. We're all invested. So this talk from Harris that it's only the elite. Yes, the environment that's been created has benefited, I would say, the wealthier more than in kind of the distribution has been towards the wealthy because of the amount of
Mhm.
investment they have. So if you look at it straight that way, yes, the benefit has gone to the wealthy. However, the wealthy, to your point, are the job creators, the spenders, and driving the economy, and that all benefits everyone in the economy. And whether you're working at Con Ed, in New York City, or you're working at Goldman Sachs in New York City, somewhere down your investment plan, somewhere down your retirement plan, whether it's a 401k or an IRA or a union funded pension, there are equity holdings, there are treasury holdings, there are investments in there. This is a system that's set up for everyone to succeed as long as it's not broken. And to break it's one thing, to break it on purpose is another thing. And I think it is very binary at this point. We either win or we lose. EJ, honestly, wealth of knowledge. I love the suit. You look fantastic today, as you always do. By the way, you looked great on Varney yesterday. I did see you yesterday morning on Varney. Love him. Loved you. Great interview. Thank you so much for the time, man. I love it. We will be back next week and have a great weekend. I appreciate it.
You too, Anthony. Thanks for all the valuable insight on the market, man.
You're the best. Talk to you soon.